Trey, I want to thank you for coming on, but I want to welcome everybody who is tuning in. My name is Brian Trippe. I'm with Real Estate Investing Live. And right now, we had the REI Live podcast. We've kind of turned it into the current state of real estate podcast. And we're just going live as much as we can, trying to get as much information out to the public, to you guys, to the real estate community as we can. I'm located here in Birmingham, Alabama. We have guests on from all throughout the country, but I do about once a week love to get on and talk specifically about Birmingham, and that's what we're going to do today with Trey Cummings, the CEO of CS Equities. Trey, I want to kind of start right there. What is it that you do specifically?
So we are basically a vertically integrated real estate investment company. So what does that mean? That means that we start out, we find the properties, take those properties, renovate those properties. Then from there, we take those properties, actually lease them out. Then we package them up, and then we finance those properties. And then from there, we actually have investors come in with us, and then we hold them for the long term.
Got it. And so give everybody kind of listening an idea of, how long have you been around? How many projects have you done? How many doors are you managing right now? All that kind of stuff.
Right. So started in 2005. So, which was, kind of a little bit like a few years ago, had that time period where everything was ramping up, then went through the, 2008, 2009, crash right around that time. Around that time, and really before that, was flipping a lot more of the homes. Around 2008, 2009, and we always wanted to, in fact, actually, I think you said even the very first REI Live you ever did was, you need to get your income, but why do you want to get your income? You want to get the income so that you can then have long-term properties and have cash flowing properties down the road. So that was pretty much the game plan of, hey, the flipping is great, but long-term, how can we, have cash flow and have a business? So from there, went through that cycle. Probably the only mistake we made was we probably just didn't dive in with, both feet and just, purchase a ton of property during that time. But after that, really started getting into it hard and heavy on the rental side in 2012. Starting in 2014, we started our first fund. So each year we've been doing a new fund. We're up to, we're closing out our fourth fund right now and starting up our fifth fund.
Yeah.
Shortly.
That's
and
incredible.
Then as far as number of doors, as far as number of doors, we've done, I've done somewhere between 800, 900 doors. We're currently managing about 700 of those, about 600 we own. And
the rest of them, at some point, you just kind of sold off. Is that kind of how it went, or?
Well, yeah. So the others, like I said, we had kind of sold off on, during the flipping time during that point.
Yeah.
And then some of those are kind of mixed in there. I mean, those are some that we have purchased and we've kind of sold those over into our fund over time.
Gotcha. Well, I kind of want to dive right in, Trey, because I think what most people are interested in learning right now is things are there's so many unknowns right now. Like we really don't know what the future is going. We don't even know what next week is going to hold. Some people are comparing this to 2008. I don't know if that's the right comparison. I might ask you about that here in a minute. But give us kind of the current state of how you see Birmingham real estate.
Yeah, no, I think this is more like a 2008 cubed. I mean, this is, in some ways, this almost makes 2008 look like nothing. When you go on the weekly job, unemployment thing, and you see the charts of what it was, and then all of a sudden this thing spikes up to about 6 million. That's obviously very concerning. But I will say this, I don't know that it's really necessarily like 2008, obviously, because it doesn't start as a financial contagion. That was a financial contagion that then spread over into the economy. This is something that's more economic that could turn into a financial issue as well. And, what are the differences? I would almost probably equate this to more of a natural disaster. So let's say that we had property in Mexico Beach, a year or so ago or whatever, and that hurricane comes and destroys that. That's a little bit more of what we're dealing, except we're dealing with it across the entire nation. What can be done about that? Well, I think the one thing good, I think at first, I think we were all hoping this was going to be like a V. We're going to go down, but hey, it's just going to be for a couple of weeks or whatever, and then we're just going to shoot right back up. Well, I think as this goes on, I think as we look at this, and I think we look at some of the contagion that is going to spread through the economy, I think what you're going to see is you're going to see more of a U, or maybe a slight, kind of with a little bit of a V to it, but But as far as the slope of that V, that's going to be the, that's the big question. What is that going to be? And then I think we're already seeing that, several spots that were weak in the economy are already going away. Obviously, you're seeing some restaurant chains that probably were kind of teetering anyway, and now they're just saying, forget it, we're done. And I think you're going to see that with several, businesses and maybe some industries. And I think it's really going to be important to kind of figure out how long is this going to take to get out of.
For sure. And because of the unknowns, I want to kind of get back to that '08 statement you made in a second, but I really want to, I feel like the most pressing thing that I appreciate the insight there. What do we do right now? And I know you can't speak to everybody because you guys have a very specific niche. So let me ask you kind of pointedly, what are you guys doing right now? Are you just holding off and not buying anything? Are you trying to buy? Are you getting even more aggressive? Tell us what you guys are doing specifically right now.
So right now we have kind of held off of buying a lot right now. We were buying probably about 20 properties a month. Somewhere between 10 to 20 properties a month. I think last year it did close to about 200 properties, somewhere around that range. Right now we are. Now, why are we doing that? Not necessarily because we don't believe in the market. I think one is because we're just very early in the stages. And I will tell you, 3 weeks ago, around that time, nobody knew what was going to go on. You're sitting there watching the market go down 3,000 points, up 2,000 points, and go through the cycle. So, there's a couple of reasons that we are holding on right now. Number one is we're trying to figure out what the financing play is going to be. So because we do have a lot of properties, we obviously use a lot of financing. And a lot of that is in the permanent market. The other part of that too is we actually came into this, I don't want to overplay it and say we came in strong, but we came in about as well as you can come in. We came in 98% occupied on our rental portfolio. We came in, we already have, we have about 50 more projects, really about 100 when you look at it, but we have about 50 projects that are ready to go that we're currently renovating and then getting ready to list out. We've got a little bit of runway on those. So the first thing that we're doing is doing that. We're also in the process that we actually started the process before this. We're in the process of financing a multifamily unit up in Huntsville, and we're in the process of financing a 41 unit package of single family homes for one of our funds too. So we're trying to look at that as also of, hey, let's get that cleared up and let's get our house, house is in pretty good order. We have capacity. However, let's get in very good, kind of that indestructible balance sheet type position that, you would hear, bankers talk about. But anyway, getting that fortress balance sheet to where then once we feel like we're in good standing, and let's let this thing play out too, because if I buy something right now, Brian, what price do I buy that at? In other words, what is going to be the price in 2 months, 3 months, 4 months down the road? It could be one or two things, right? I think we're going to take a hit. I don't think it's going to be like, oh, it's 100,000 a day, it's going to be 100,000 tomorrow. It's going to be some kind of hit, but we don't know how severe that hit is going to be right now. I don't think it's going to be huge, but I think it's going to be something to some effect. And I don't think that's because of the property. I think what you got to really watch right now is you got to watch this mortgage market. Right now, the mortgage market is in a lot of turmoil. And if you're not going to be able to get the financing, then you're not going to have the values. If money is easy and credit is available, the values will go up. But if the liquidity starts tightening up, it's going to be very hard for people to pay the prices.
Guys, we're talking to Trey Cummings. He's the CEO of CS Equities. They have many funds. They buy a lot of property in the greater Birmingham area. You just mentioned a multifamily complex up in Huntsville that you guys are working on too. If you have a question for Trey, please put it in the comments of our Facebook Live right now. Love to kind of get to your questions a little bit later. But Trey, I want to kind of follow up with you about what you just said about financing. I think that, obviously we all know that over the past, 8 to 10 years, it's been very easy to get money. Money has been available everywhere. Do you anticipate with what's been going on with the stock market crashing like it has, there is a lot of money still on the sidelines? I hear people saying, I want to get into real estate right now from an investment standpoint. Are you hearing about that right now? Is there going to be private funds like that available outside of the mortgage industry that you kind of mentioned?
I think there will be. I think it's just going to depend. It depends obviously on how strong people are. And yes, you are going to have some money, and you do have a lot of people that have liquidated right now, and they are holding that money on the sidelines, and they're trying to figure out what they're going to do with it. I do think this is a real positive. I'm sure I've been pessimistic, but I will say this is a positive. So what are we seeing too? As far as, we'll just talk about residential real estate and not commercial real estate, which is going to be a whole different game right now. But on the residential real estate side, I think what we're seeing, and we're in the early stages, and it's April 7th, but we are seeing a lot of resilience. I know we're seeing our numbers not really vary too much. We know they're going to be down a little bit right now. We looked at our portfolio before this happened, and we noticed that, what I would say about 15% of our tenants would be in a severely affected industry, such as retail, such as hotel lodging, food service, those type things. But here's the good thing, and especially for anybody that's looking that's outside of, Alabama or Birmingham, is, Birmingham is a unique market in the sense that, when you think of Birmingham, there's really not much to think about. In other words, we don't have some huge tourism market. We don't have a lot of, we don't have a huge airport like Atlanta that's going to be, that from an economy standpoint is just decimated right now. So we're not exposed to a lot of the areas that are being hit really severely right now. Birmingham and especially Alabama, kind of goes, like this and doesn't really do much, where you go to your California, your other markets, they're going to spike up. But what happens too, they come down real hard during that time too. So we're going to kind of stay a little bit steady. And I think the other thing is that in real estate, I think residential real estate, and I think especially single family homes are going to be very resilient, because right now we're seeing that more people, I think everybody's probably come to appreciate their home. They're probably looking at their home and saying, hey, this is not bad. I have to work here, eat here, the family's here. It's the one thing that everybody has to have. And I think that the density of multifamily may kind of work against that from a standpoint of, hey, I just want to be away from people for a little while.
You mentioned a second ago that you guys have roughly 50 projects going on right now that are either under renovation or that are up for rent or things like that. That seems like a lot right now, 50. And you mentioned that your the priority is to kind of get those up and going. Are you finding it difficult right now to rent things out?
So great question. And the answer, luckily, surprisingly, whatever you want to say, is no.
Okay. So talk about why you think that is.
Well, I just numbered. So last month we leased 41 properties. This month we've already leased, he may be working on the 9th, but he's already leased, I know he's leased 8, and I think he's working on his 9th right now that he's closing up. And we're on April 7th. Right now, we started the day with 31 properties for lease. We're down to 28. We got a few more about to come online. I've got if he holds those numbers, my leasing agent, if he holds those numbers, I only have a month worth of inventory right now.
Are you worried? And the worry, if you are, would probably be short term. But are you worried about tenants possibly not being able to pay rents moving forward? I've heard very good reports from April from many people. I'd love to kind of get what you found. I've heard very good reports from April saying that it's almost business as usual, not really seeing a drop off of people not paying rent, but where the impact may be is May and June. So are you seeing that? And what do you are you nervous about that?
Well, I mean, obviously we are looking at it very closely. I mean, obviously you have to have that to make the debt service to keep moving down the chain. What are we seeing though? I think the first thing we did, like I said, is we went to our tenant mix to see what areas were under, could be under stress. Luckily that was only about 15% at this time. I think the other thing you got to look at too, we need to get to the end of April. At the end of April, obviously you got some helicopter checks that will come in to a lot of people. And I think a lot of it too, this really goes back, and it's kind of hard. I hate to say, I'd love to sit there and say, well, here's the game plan. Here's what to do now. Instead, I kind of have to say, well, here's what you probably should have done beforehand. If, a situation like that happens, number one, it goes to the quality of tenants. kind of checking those. I mean, I know our tenants are somewhere the household income is going to be between $60,000 to $80,000, average a month. We're also checking their credit. There's about a 640 credit score average, across the board on our properties. And then really from there, of course, I will tell you in this environment, you could have someone with a 750 credit score and $100,000, I mean, that doesn't matter too much right now, but you've got to do that, but you've got to be in an affordable type of environment as well. And I think you've got to really be careful about the kind of properties that you go after. So I always say that we want to be right in the middle. I don't want to be on the real low end that's only cash flowing. I don't want to be on the high end that only appreciates. I'd really like to be right there in that kind of sweet spot middle that can, yes, it will cash flow. The property taxes aren't going to be crazy or whatever, but at the same time, it will appreciate some and, or have a good chance of appreciation. So I think those are the things you really have to, look at first. Luckily, stimulus checks are going to come in. Adults are getting $1,200. Our rents average at $1,100 a month. So we're going to be right in that sweet spot right there to where they can come in. I think the other thing too, that I think you got to really remember, and I really, when I look at our tenants and I look at, we have everything from an NFL player is leasing one of our properties to an exotic dancer to whatever, it's all across the board. And just long story short, you got really good people. And look, they're wanting to pay their rent. They want a good, stable environment for them and their families. So they make it a priority.
You mentioned a second ago that you think that it might be similar to 2008, but it's really, in your opinion, 2008, I think you said cubed. So,
yeah.
So it's like even more extreme, probably because of, like you said, the natural disaster component that it's likely to. And this is going to be an opinion question, but I'd love to get your opinion. How long is this going to last?
Yeah, man, I tell you. So I think you got to look at a couple of different phases of this. And I think depending on certain things will depend on how long that goes out. So where are we right now? I think the first thing that we're into is we are just in, look, the economy is on it's on the table. We're just trying to get the paddles and just trying to keep it going as best it can. You're a Chicago Cubs fan. And I heard someone say this the other day. They said, look, talking about the economy. They said, look, if I take the Chicago Cubs and I take away all their bats, guess what? They're going to bat, they're not going to have a pretty good batting average right now. So that's what we have done. We've taken the economy. We've taken all the bats out of the batter's hands and said, go up there and then do something. Well, and I think the other problem too is we are so connected. So, we haven't had anything like something like this since 1918. You go back to the Spanish flu and you see where it's kind of eerie in a way when you sit there and you read these things. Oh, the school's closed down, the church is closed down. Everybody wants to stay away from each other. So here we are, in 2020, and like I said, it's kind of the same thing. But we have completely shut down the economy. I mean, there is no GDP, right? I mean, there is nothing right now, and that contagion. But the other thing that's happened is kind of like a forest fire. You take Gatlinburg when it caught on fire a while back. Well, we don't thin out that forest, right? So what happens when a fire does break out? It can become even bigger. Well, same thing here. We've never had this. So our economy's had layers upon layers upon layers of, we have, to the point that you got Silicon Valley having a dog walking service or whatever all these services are. Well, all of a sudden that contagion is starting to just, beat down through those layers and take those away. So it's just really stripping us away to the bare part of the economy. And obviously we're a huge service economy. And so it's going to be very hard in order to just kind of keep that going back on again.
So give me your opinion. What are we looking at? Are we looking at 3 months, 6 months, 12 months?
So I think the first thing you got to look at is I think about 3 to 6 months is where we're going to be right now. I mean, I think the first, I think you have to let's look at April 30th first. Can we get to, can we get to the point where we at least say, hey, it's bending, we're going down, we kind of can see the next stage. Then from there, it's going to take a little while to trickle back. I mean, it's not going to be like May 15th comes, or let's say even June 1st comes, and hey, let's get in the stadium with everybody and play baseball. Let's get everybody together in the movie theater. It's going to take a little while. I think maybe by the fourth quarter, everything will be fine. And maybe kind of midway through the third quarter, then we will start, kind of assimilating a little bit. And of course, that also depends on the medical side of it. Do you have good therapeutics? What is the rate at that point? Do they have, can they rush a vaccine, through the system? Because, I heard someone today on a webcast tell me, they said, I don't know that I want to get on a plane or in a stadium or go to a concert until there is a vaccine. And it was someone who, like they said, look, my fiance, has, could have complications from this. So you're going to have a lot of people like that just will not want to kind of get out in society until we kind of feel like it's all clear.
Guys,
so going back to your point, yeah, I think you got to look towards mid third quarter to fourth quarter before you see any kind of even semblance of some kind of normal.
So you're not even saying that mid third quarter, potentially fourth quarter, that we're back to where we were. This is just to get back to where we feel comfortable in public again. Is that what you're saying?
I think so. I think that's very possible.
Wow. So which means this could have a lasting impact for a year or two then before the economy. And then obviously we've got an election coming up as well, which is going to affect things. Right. No, I mean, yes, it is about every weird scenario you can throw on top of it is there. Guys, we're talking with Trey Cummings, CEO of CS Equities. They have many funds. They buy a lot of single-family properties. They got some multifamilies as well, a lot of packages here in Birmingham, Huntsville, state of Alabama. Trey, guys, if you have a question for Trey, put that in the comments right now because we only got about another 10 minutes with him. So make sure you put your question in the comment section right now. Trey, I want to kind of go back to something that you said in the beginning about the prices, what price to buy at. I know you said also that you're trying to, not that your financial house is not in order, but you want to make sure that you've got these 50 we're good to go and you've got some runway and hey, we're ready to keep really being aggressive here. How do we know what price to buy at? Things are changing every single day. Right. Well, I think you got to look at a couple of things on that. I think, like I said, I think the things you need to watch for and I'll be honest with you, I have no idea until certain things come into clarity. I think number one is what's going to happen with the mortgage market. Because right now, look, we're already seeing that certain lenders that would, even finance single-family rental home packages, they're suspended. They're out right now. And then you have other, even regular mortgages and stuff that are doing that right now. I think right now you're okay. But, you've got appraisers out there. Obviously, right now they're going to be appraising at, previous prices. But, as things kind of go in a month or two, when do they start looking back? Do they just start making a call? The other part of it is, and when I talk about this mortgage market is, on the other end of that mortgage market are people that are buying these bonds that are normally pretty safe bonds. They're trying to wait back and they're trying to see, are people going to pay their mortgage? Are people going to pay their rents or whatever to where they go to the mortgage servicers and then those, servicers are able to go and they're able to pay those bonds. If those mortgage servicers aren't getting the money and they don't pay those bonds, well, then that could possibly crater the entire mortgage market. And then all of a sudden, it's just like right now, hey, we got a lot of appraisers out there that are scurrying around because a few weeks ago, the mortgage rates just dropped. Right. Well, they dropped and everybody wanted to go and refinance, which is, probably a smart thing to do. So they're out there refinancing right now. But after that is done, what the bondholders and the people that invest in these mortgages are looking at the other side is, okay, we got that, but they're trying to get an idea too. They're trying to get clarity, just like you are, of what price do we pay? Well, they're like, well, do I want to invest in this? In other words, am I going to, who's going to be left holding the bag at the end of this? And that's what everybody's worried about. For sure. And so because of that, the mortgage companies have to have someone to sell those, bundle those and sell the mortgages too. No doubt about it. You said earlier about 2000, you got into it in 2005. 2008 comes around. I can't remember. Did you say you wish you had jumped in with 2 feet or you did jump in with 2 feet? Well, and let me say this on the, I recall it real well. In fact, I remember watching, TV and it was February 2007 and New Century Mortgage goes down, which was a subprime lender. At the time, we had a lot of properties that I would say were in a subprime area where
look, you would buy a property for $25,000, put 10 in it, sell it for 80. Everything was going good, liquid. Everybody had money. Well, as soon as we saw that, I actually, got with our group and said, look, we are going to get out of anything that's subprime. We started going into more quality properties, with the idea that, people that have money have money. And that's kind of what we saw. We saw the bottom of the market really crater during the subprime issue.
So my kind of led to my question. My question is, well, are you guys, after you kind of feel like, your financial house is in order, we're ready to go, do you feel like this is an opportunity where you guys are going to be, and where you kind of suggest to other investors who have the capital and are ready to go to dive in with 2 feet and really pounce right now?
No, we are. And that's the other thing that we're really looking out for. Here's the thing. I think this is going to be a little bit of a flat U. So I would say this for people that are looking in, I wouldn't get in any rush to go, unless you just find something that, look, it was maybe 50% or something along those lines of its previous value. Mm-hmm. There's no rush to jump in there. You're going to have time. But going back to your point, absolutely. So we've already, even talked to our lenders, and talking to our different contacts, basically saying, look, if you have operators that are having trouble, please let us know, because we will, most likely, assuming we're good, which we believe we will be able to come in and take over that spot. So we are looking at that. And, in fact, we've actually, taken over some deals and have some contacts already around the country that have brought us some great deals in the past. And they're about to get a lot more deals in the future.
We got a question coming in from Spencer. How's it going, Spencer? It says, hey, Trey, what do you think that all this is going to do to the market in 2021 as a whole, and also from a lending perspective?
Yeah, well, one big shout out to Spencer. I'm gonna tout him real quick. So this past year, I was commissioned to do a few 1031s for some clients, some big packages. And Spencer, who's a home inspector, I would give him 45 properties at a time and say, you've got about, less than a week to knock these out. And he did it, knocked out the reports and everything else. So big shout out to Spencer. 2021. I think in 2021, we'll have a little bit more clarity during that time. And I do think that, from someone like a Spencer who's a home inspector, or, someone that's looking from, I think volume will be there, right? As far as pricing or whatever, because, if you're in the business of where it's just volume, it doesn't matter whether the prices are low, the prices are high, you're just looking for that volume. I mean, really, for real estate agents, it may be in some ways a little bit easier than, say, 2020 or 2019, where you had such limited inventory, to where, yes, there was movement in the market, but the volume was probably suppressed a little bit because, the inventory was not there. So all of a sudden you may have the inventory.
For sure. TJ, what's up, man? I appreciate the question. TJ asked, do you think the retail market will mostly come to a halt over the next couple of months, specifically in the 150 to 200K price range?
I would say no. I think that is the hottest price range.
I do too.
In fact, I think our average property is somewhere, in that range. And that is, I will buy that all day long. That market right now, even now with all this going on, see, one thing that's going to happen is you're going to see, and in some ways, as I was talking about, a little bit more transactions, but supply is still going to be constricted. It is so hard for builders can virtually not build in that 150 to 200 price range. So we try to, and really at 100 and 200 especially, but what even before all this, that was the range that was needed the most from people. So we buy up, anything between that 100 to 175, 200 range, we buy it all day long, because they can't build it, and they can't build it. Even if I buy it for face value, they can't build it for the face value.
Totally. I agree. Trey, I appreciate you. That's kind of all the questions that we had. I want to kind of give you an opportunity, because I don't know your industry quite obviously as well. I want to give you an opportunity. Is there something I missed? Is there something you kind of want to say that maybe I wasn't able to get to?
Dude, I want to know what you're doing to lose all this weight.
I'm working my butt off, man.
I know, man.
Hey,
I see you on the elliptical and everything else. So no, I mean, I can tell. I mean, you got that. You got the coronavirus beard going on and all that. Looks good.
I appreciate you, man. I think right now, and I hope, especially the Birmingham people who are listening, I love you guys. And I think right now is a great opportunity for you to do something that's incredible with yourself, whether it's you're reading more than you ever have, you're working out, you're eating right, you're spending time with family, things that maybe you've neglected over the past, however long. Take this time. If you do have a little bit extra time, take this time to really work on yourself. Don't just waste it. Don't just Netflix and chill like everybody's trying to do. I saw a meme the other day where he said, all right, I've watched all of Netflix now. Now what do I do? So it's like, that's what people are doing right now. So I want to encourage you to not be that person.
No, I'm getting on Peloton running and I got these 100-pound girls that's kicking my ass every day. So it's good stuff.
Well, Trey, I appreciate you. Give everybody an opportunity to know how they can get in touch with you, especially for the Birmingham folks who are watching this who wholesale. I know we have a lot of wholesalers who are looking at this. I know you work with wholesalers. What are you looking for buying criteria today? I know you can't, the price range might fluctuate a little bit, but today, what are you looking for? And then how can people reach out to you?
Yeah. So, I mean, look, we at the end of the day, we try to look at large packages of properties. Now, let me say this. What we look for is we look for that sweet spot of properties, that, like I was just telling you, that something that's probably going to ARV at 150 to the 200 range. We really like that piece of the market. We also like stuff, I like the stuff that's probably surrounding the Birmingham area. I mean, we look at a lot of St. Clair County, a lot of Shelby County, a lot of, we buy a lot in Montgomery. We're Tuscaloosa area, but we're looking for places of employment. And we're looking for properties that really are hard to build.
Yeah. Trey, I can't thank you enough. How can people reach out to you? What's the best way?
That's the office, 205-789-1257. Hit option 3 and, let our receptionist know, and I'll get back in touch with you.
Okay, perfect. Yeah, 205. I'll put that in the comment section. 205-789-1257. Hit option number 3 and get with the reception. Trey, thanks, man. I appreciate you.
Hey, no, thank you. Appreciate it.
Yeah, and we'll see you guys next time. Love y'all.